All right. So today we're going to take a deep dive into some of the big moves that Warren Buffett has been making
Yeah.
in the financial sector, and
hmm
particularly Bank of America.
hmm
And we'll see what it might mean for the rest of us.
Yeah, when somebody like Buffett starts making waves,
Right.
you got to pay attention.
Exactly. And we've got
No
a
steps
a
deals.
whole stack of reports and analyses here,
Yeah.
and we're going to try to break it all down for you.
Yeah.
So what has Buffett been up to with Bank of America?
Right.
What does it signal about the wider banking landscape?
Yeah.
And what should you be taking away from all of this?
So let's start with this,
Yeah.
the real headline grabber here. Buffett's been pretty steadily selling off his Bank of America shares since July.
Okay.
And we're talking about a significant amount of his holdings here.
Right.
Over 18 million shares totaling roughly $800 million.
Wow.
And then as of early September,
Yeah.
he had sold shares on 24 out of the last 36 trading days,
Wow.
offloading nearly $7 billion.
Okay. That's a pretty big statement.
Yeah.
And knowing Buffett's long game approach to investing,
Yeah.
it makes you wonder,
Yeah.
what is he seeing that maybe we're not?
Yeah. And, he's not somebody that makes rash decisions,
Right.
especially when it comes to finance. I mean, remember back in 2008,
Oh, yeah.
when things were really shaky,
Uh-huh.
he was the guy that the government called on to help stabilize Goldman Sachs.
Yeah.
So,
Makes you wonder if there's something brewing in the whole sector.
yeah, it really does. This Bank of America
Yeah.
exodus, is definitely sending ripples throughout the market.
Right. And it's not just about one stock. It's
Yeah.
the implications of what it might mean.
Yeah. No, it's like watching
The rest of the...
a grandmaster
Yeah.
make a strategic move in a chess game.
Exactly.
We got to figure out his end game. And that's why it's so crucial to understand not just what he's doing,
Right.
but why.
Oh, why?
Yeah.
So Bank of America actually had a pretty decent second quarter.
Yeah, on the surface.
Yeah.
They had a great second quarter. Over $25 billion in revenue,
Mhm.
almost $7 billion in profit.
Yeah, you think that would be a reason to hold on to it, not sell it off?
Yeah, you would think so, but
Yeah.
you have to remember that the banking industry is built on this foundation of leverage.
Right.
In the U.S., banks typically operate with leverage ratios of around 15 times their assets.
So that means for every dollar they have, they're lending out $15.
Exactly. So for every dollar they have, they're lending out 15.
Right.
And with off-balance sheet items, that leverage can
Mhm.
skyrocket to 30 times.
So it's kind of like building a house of cards then.
Right.
Like one strong gust of wind and the whole thing could collapse.
Yeah, it's a really delicate balancing act.
Yeah.
And then when you factor in some of Buffett's recent comments where he's expressed some concern about the commercial real estate market, the picture starts to become a little bit clearer.
Real estate, yeah.
Yeah.
Always a factor.
Always.
So I'm starting to see where this is going.
Yeah.
But how does that tie into Bank of America specifically?
Okay, so in the U.S.,
Yeah.
a whopping 45.1% of bank loans are tied to real estate.
Wow.
And for smaller banks,
Right.
that number jumps to a staggering 67%.
Okay. Yeah.
So any kind of turbulence in the real estate market can send these shockwaves through the whole banking system.
Okay, so we've got banks that are heavily leveraged. A lot of that leverage is tied up in real estate, and
Yeah.
Buffett seems to be getting out of Dodge.
Yeah.
That's not exactly a very comforting combination.
No.
What is he so worried about in the real estate market?
Well, one word, defaults.
Yeah.
Think back to the 2008 crisis.
Yeah.
Lehman Brothers collapse was triggered by this wave of defaults on mortgage-backed securities.
Oh, yeah.
And, it was a real stark reminder of
Yeah.
how these seemingly localized property risks
Can cascade into this system-wide chaos.
That's a scary thought.
Yeah.
But is there anything specific that might have set off alarm bells for Buffett recently?
Actually, yes.
Okay.
And this might be the piece of the puzzle that really explains his recent moves.
Okay.
There was this recent case of a AAA-rated bond that was tied to a Manhattan property,
Right.
and it defaulted
Oh, wow.
and lost 70% of its value.
Ouch.
Yeah.
What makes you think that that's connected to Buffett's decisions?
Timing.
Okay.
The default happened right around the time that Buffett started dumping
Oh, really?
Bank of America stock in July.
Hmm.
So it's not conclusive proof, but it certainly suggests that he might have seen this as a canary in a coal mine.
Yeah, like a warning sign.
Yeah, a warning sign of this deeper trouble brewing in the commercial real estate market.
Okay, I'm starting to understand how serious this could be.
Yeah.
So we're not just talking about a few bad loans here and there.
Right.
We're talking about, potential systemic risk. Exactly. And, the interconnectedness of the banking system
Yeah.
means that even these seemingly small tremors
Yeah.
can quickly amplify into much larger problems.
Right.
And here's the kicker. Over $900 billion
Wow.
in commercial real estate loans are set to mature by the end of this year.
$900 billion.
$900 billion.
That's a huge amount of debt
It is.
coming due. And if those loans can't be repaid,
Right.
well, let's just say I'm glad I'm not a banker right now.
Yeah.
So is Buffett's concern limited to just Bank of America?
That's a good question.
Or is he seeing like broader red flags across the whole market?
And it's one that we'll dive into after a quick break. Because Buffett's moves in other sectors, particularly with cyclical stocks, tell an even more intriguing story about his current investment strategy.
All right, we'll be right back with more insights from our deep dive into Warren Buffett's latest moves. Okay, so we're back, and before the break, we were talking about some pretty alarming signals coming from the banking sector.
Yeah.
Especially with all of that leverage tied up in those real estate loans.
Right.
It makes you wonder if this Bank of America sell-off is just the tip of the iceberg.
It certainly raises the question of, whether Buffett is seeing a broader pattern here.
Yeah.
And when you look at some of his other recent moves, it does seem like he's taking a very cautious approach,
Right.
especially when it comes to these cyclical stocks.
It's funny. I was looking through my own holdings the other day,
Uh-huh.
and I realized I'm actually pretty heavily invested in those cyclical sectors like energy and materials.
Right.
And now I'm second-guessing myself a little bit.
Well, it's always wise to be self-aware and review your portfolio in light of new information.
Right.
Buffett isn't a crystal ball,
Yeah.
but his actions can definitely serve as these valuable guideposts.
Uh-huh.
And it's interesting you mentioned energy because Buffett has been noticeably hesitant to jump back into that sector,
Right.
even though oil prices have been on the rise.
Yeah. I remember reading about how he sold off a bunch of his Occidental Petroleum stock a few months ago.
Right.
And it seemed a little bit odd at the time.
Exactly. And that's what makes his current stance so intriguing.
Right.
It suggests that he's prioritizing stability and resilience over these potential short-term gains, especially in sectors that are, heavily influenced by economic cycles.
So basically he's saying don't get caught up in all the hype. Stick to the fundamentals.
Precisely. And when you contrast his reluctance to invest in cyclical stocks with his, continued commitment to companies like Apple and Coca-Cola,
Right.
the message becomes even clearer.
Those are definitely the kind of companies that you want to have in your corner during a storm.
Right.
No matter what the economy is doing, people are still going to want their iPhones and their Coke.
Exactly. These are non-cyclical companies with strong established brands and business models that have proven their ability to generate consistent returns over time,
Right.
regardless of market fluctuations.
Okay, so it seems like the key takeaway here is that if even the Oracle of Omaha is getting cautious about certain sectors,
Right.
maybe it's time for the rest of us to kind of take a step back and reassess our own strategies.
Yeah.
But
Yeah.
let's be realistic. Like, how do you find that balance?
Yeah.
For someone like me who likes to dabble in a little bit of everything,
Right.
how do you find that balance between playing it safe and still potentially capturing some of those exciting gains in the market?
That's the million-dollar question, and there's no one-size-fits-all answer.
Right.
It all starts with understanding your own risk tolerance and investment goals.
Okay.
Are you investing for the long haul, like retirement?
Yeah.
Or are you looking for more short-term gains?
Because a 20-year-old can probably afford to take on more risk than like someone nearing retirement.
Your time horizon plays a huge role
Yeah.
in determining your risk appetite.
Okay.
And then there's the question of how much volatility you're comfortable with.
Right.
Can you stomach big swings in your portfolio?
Yeah. Or do you prefer a smoother ride?
So it's not just about blindly following Buffett's lead.
Right.
It's about taking his insights and applying them to our own individual circumstances.
Absolutely.
But even with all of that considered, the market can still feel like a bit of a mystery sometimes.
Absolutely. And that's why it's so crucial to do your research
Yeah.
and really understand the businesses you're investing in.
Right.
Don't just chase headlines or get swayed by hype.
Uh-huh.
Look beyond the surface and focus on the fundamentals.
So things like a company's financial health, their management team,
Exactly.
their competitive landscape,
Precise.
all that good stuff.
And even within those cyclical sectors that Buffett seems to be wary of right now,
Right.
there are always going to be companies that are better positioned than others to navigate these economic headwinds.
Okay.
So it's about being selective and discerning, not just throwing darts at a board.
Okay, I'm starting to feel a little bit more empowered. Like, I can actually use this information to make some smarter decisions.
But I'm also realizing there's a lot more to unpack here.
There is, and there's one more crucial aspect of Buffett's strategy that we haven't even touched on yet.
Okay.
And it's arguably one of the most important lessons he can teach us about navigating these uncertain times.
Oh, now you've got me really intrigued. So I guess we'll have to uncover that mystery in the next part.
We will.
All right, so we're back. And you were just about to tell us what is arguably one of the most important lessons we can learn from Warren Buffett.
Yeah.
About navigating uncertain markets.
You know, it really all comes down to a concept that might seem a little bit counterintuitive, especially in today's world.
Okay, I'm intrigued. Hit me with it.
Patience.
Patience.
Buffett is the master of playing the long game.
Right.
You know, he's not interested in chasing these quick flips.
Right.
Or timing the market perfectly.
Yeah.
He invests in companies he believes in for the long haul.
Uh-huh.
You know, weathering storms, riding out these temporary dips in the market with remarkable composure.
It's definitely easier said than done when you're constantly being bombarded with news headlines and market fluctuations.
Yeah.
It's so tempting to react to every little blip
It is.
on the radar screen.
Yeah. But, you know, that's precisely where Buffett's discipline and long-term vision set him apart.
Right.
He doesn't let that short-term noise distract him from his overall strategy.
Yeah.
He focuses on the intrinsic value of the businesses he invests in
Right.
and trusts that over time the market will recognize that value.
So what you're saying is, instead of panicking when the market takes a tumble,
Yeah.
we should be looking at it as an opportunity to buy into solid companies at a discount.
It's about shifting your perspective from short-term anxiety
Right.
to long-term opportunity.
I like that.
You know, when everyone else is running for the exits, that's often the best time to be greedy,
Right.
as Buffett famously said.
But how do you apply this to the current situation where, we've got these potential headwinds in these sectors, and even Buffett himself seems to be pulling back?
Well, first of all, you have to remember that even in challenging economic environments, there are always pockets of opportunity.
Right.
It's just a matter of identifying those companies that are well-positioned to weather the storm and emerge stronger on the other side.
So going back to our whole discussion about cyclical versus non-cyclical,
Right.
it sounds like this might be a really good time to be focusing on those stable, non-cyclical businesses that provide essential goods and services.
Absolutely.
The kinds of things that people will always need no matter what the economy is doing.
And companies like Apple and Coca-Cola, which we mentioned earlier, are prime examples of this.
Yeah.
They're not immune to economic downturns, but they have a proven track record of navigating difficult periods and delivering consistent value to their shareholders.
So we're not talking about completely abandoning those cyclical sectors, but maybe being a little bit more selective.
Yeah, just be more selective.
Focusing on the companies with strong balance sheets,
Yeah.
good management teams,
Exactly.
clear path to long-term growth.
Exactly right. And, remember, this isn't just about mimicking Buffett's every move.
Yeah.
It's about learning from his principles
Right.
and applying them to your own unique investment strategy.
Right.
What works for him might not work for everyone.
So in the end, it all comes down to doing your research, understanding your risk tolerance,
Yeah.
and staying focused on your long-term goals no matter what the market throws at you.
Beautifully said. And, that's a pretty great takeaway from our deep dive into Warren Buffett's world.
Yeah.
He's obviously a brilliant investor.
Yeah.
But more importantly, he's this master of discipline, patience, and long-term thinking. And those are qualities that we can all benefit from, regardless of our investment experience or portfolio size.
Absolutely. And if even the Oracle of Omaha can be rattled by all of this market uncertainty, it's a good reminder that we all need to stay vigilant, do our research, be prepared to adapt our strategies as the landscape changes. And most importantly, don't panic.
Don't panic.
Take a deep breath.
Right.
Remember your long-term goals.
Keep your eye on the prize.
Keep your eyes on the prize.
Exactly.
Well, I think on that note, we've reached the end of our deep dive.
Okay.
But as always, we want to leave you with something to ponder.
Okay.
If even Warren Buffett is adjusting his sails in these uncertain times, what adjustments might you need to make in your own investment journey?
It's a great question to consider as we all navigate these uncharted waters.
Well, thanks for joining us, and until next time, happy investing.